Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin going a little bit sideways as we got that down recovery of the wick that we were talking about and a bounce back up above the 42,394 area on this Coinbase chart. Can we get a continuation up to the point of control up here at 43,640 or not? Let's go into this is also the diagonal pitch fan 706 level being respected here. Do we go up to that 786 of the diagonal pitch fan we've had price in for over a year? And yeah, let's go take a look at the liquidity of high block. What is high block and the liquidity? Will people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss? And we get to see where those crispy characters are. So let's do it now. All right. First, let's go ahead and make sure this is on max liquidity. I will be going to a free resource for this soon because it's just comparable. Free is a price that is uncomparable here, so we'll see how this works. So as we see on the 1 minute time frame, we do have $189 million up here in this range at 43,472 that we have yet to come up to. We've been knocking out some 100xers over here, 57 million knocked out here in shorts.
Fatality.
Meanwhile, inducing some longs all the way down and coming to gobble up the longs. So the longs got bitten too.
Fatality.
And then, yeah, do they finish the job at this 42,325 character or not? And do they even go lower? On the 1 minute time frame, you're imbalanced to the tune of $16 billion in short liquidity as you forget all of the other stuff to father time. So we have to go to the higher time frame pools. This is where we shift to the 7-day and move this to max liquidity and take a look at what lurks below. Below, we have some billions down below here at 41.3 and 41 even. So there is some longs to get swept up down in the bottom here on the 7-day time frame. For the most part, though, they did clean up most of the long liquidity on the 7-day. If you start to shift your attention to the monthly, that's when you start to see, whoa, what's going on here? If it'll load properly. Okay, so down in the, again, it forgets the max liquidity setting I just put it at. It should default to max and let you do the relative as the option. That's what it previously was. Anyway, so the 41K region has about, I don't know, $7 billion down here that they could come grab. Overall thicker band up above that they started to tap into a little bit here and are eating some of these 50x, 100x people trying to fatigue out the gnats that fly around price action at 100x, get them scared out of entry as it wick-whacks both sides. This grab to the longs down below was a nice juicy grab. It's starting to get thick down here. I would be surprised if we wouldn't be surprised if we come down and reclaim that wick in its entirety on the monthly. Wait, we switched to the 7-day? I thought it was the monthly. Monthly time frame does have some liquidity down in that 39 region. We were talking about possibly sweeping that over here. So we were talking about the possibility of sweeping all of these longs off the table and this 236 needing to hold for a bullish move 42,114 from this impulse retrace idea here. Impulse retrace. So this impulse retrace gives you that level that we're at currently. Can we hold this level to get a bounce up to that 45K pool or not? If you fail that 42,114 region, then you could be sweeping all of these longs off the table at 39K. We're actually expecting that to occur after you come up to this region and possibly coming down to here later, but we'll get there in a moment. So that is what is on the chopping block here at that sub 39K region, all of those longs building up sub 40K. Granted, you also have these shorts building up at 50K. Are these in the money? They are in the money right now, and possibly the pivot zone, because as you expand your vision to the 3 month, you start to notice that the draw is quite thick down below. Sub 35 and below also has a very nice pool to draw from in long liquidity of shorts of the sell stops. If you go to the 6 month, also very thick on the band of liquidity to the downside and very threadbare on the upside. So does that lead the narrative price structure to go to the downside? Ultimately, we said we were looking for a juicy swing short. We would like to see a failure up here at 45. It'd be nice to stop out the shorts one last time and then fade it. That's my plan anyway. We will see how that plan plays out. Generally, we are pretty on point. We talked about coming up to this pool. If you recall, coming up, we were saying we'd come up to this 48.2 region, and we did, and then start to reject. So that was a very nice opportunity to short, and the other one coming soon, perhaps at that 45K region. Okay, so let's go ahead and turn on our oscillators and see how things are on the momentum. We got liquidity, math, and momentum, the 3 pillars of trading. So now we're going to the last pillar, momentum. You can look at the link in the description for more. And scroll down to features, toggle at your leisure, and see the schematic for what you would look for a long opportunity, the inverse for a short, the trend cloud, the baselines, the stochastic array, and more. You can get dynamic alerts to your phone, so you don't need anyone but a solid system that's been back tested for thousands of hours, so you don't have to. All right, so yeah, and those smart money people that hate on indicators normally follow it up with their mentorship, which costs thousands of dollars. So yeah, that's exactly why they hate on indicators, is because they want you to pay them. So ask for receipts from any guru that claims to be a guru, and ask for them to show you a payout slip. If they cannot do that, then they are a liar, period. End of story. So let's go to the 3-day, because we've been talking about the 3-day for some time now. Here's the 3-day cross down event. We've been talking about this, and we will keep harping on it. The 3-day candle did close bearish, so it shows that fatigue is still being expressed on this 3-day cross down event. The last time we had a cross down, it did fake out and then eventually expressed 18% retrace from that cross down. And in July, this was April, in July you had another one that expressed fairly quickly to the tune of 18%, and then in September we got the cross up, which cascaded quite nicely to the higher price area. So this is the first time we've seen a cross down in some time, so we've been looking at the possibility of retracing back lower. So do we see a pre-halving retrace? Read about it with Rect Capital on X, with this 5 phases of the Bitcoin halving, pre-halving period. He does a pretty good job of explaining it, so I won't go into it here. But basically we could be inbound for that. Selling, buying the rumor, selling the news type thing with the ETF approval. As everyone gets bullish the entire way down, they could use that liquidity to retrace and reaccumulate on. We're looking at the daily time frame cloud kind of tapering here at this 2 o'clock angle, still pointing to 2 o'clock, but starting to possibly taper to that 3 o'clock, which shows the abatement potential of this upwards move. We've seen multiple hits to the cloud, bounce. Here we broke the cloud, so is this a bearish retest of the cloud to go lower? This is the first time we've hit the daily cloud and broken through it since back here with this August breakdown retrace idea. So if it's very similar to August, then we could be seeing a retrace down into some of the sell stops for the longs. Okay, so looking at the daily time frame oscillator, you got reset on the stochastic RSI, money flow coming beneath the RSI here, MACD also coming lower, Williams getting into an oversold state, still could come lower, not exactly sold on this average being this far away on the daily time frame. I'd like to see it with the rising sun events down here, similar to September. That's when you have more of a probability of a upside path. This is more of like a bounce at best, dead cat bounce type idea. If we look at the 22, we have this curvature of the cloud possibly coming to the downside here on the 22-hour time frame. Also, money flow beneath the RSI, suggestive of that bounce idea. We were talking about that before, this money flow disparity. So this disparity between the money flow and the RSI, insinuating the money wants to come back into it. Other prominent indicators that have money flow, and they look at that, it's not actually money flow because it displays on assets without actual volume. So this is one that factors actual volume, so it's interesting to note when the volume and the money flow gets beneath the RSI. This money flow is known as the volume weighted RSI, so that's why we overlay them. So when they get disparate like this, the last time was over here, they get disparate and then they pop. So it is setting up for a kind of pop opportunity on the 22. And this is also prevalent, I believe, on the 12. Here you have the money flow beneath the RSI as well, with the oversold Williams, oversold stochastic, MACD coming into the Williams donut main, could be coming a little bit lower, but that subtle insinuation of upside on the 12-hour. Coming to the 6-hour time frame also has this money flow beneath the RSI here, starting to come back up. If you caught that recovery of the wick, congratulations, we laid it out for you yesterday. False move Monday. Very easy to say that the first move is most likely false, so that drop was likely to recover. We were not seeing lower prices, we were seeing the pop, and we got the pop. Also, 6-hour in a oversold condition, looking to possibly come up here. So you got the 6 and the 12 subtle support. 4-hour time frame starting to come up here and fatigue for a potential double top. You're getting a rising sun on the Williams. Bullish divergence on the RSI from here. And the money flow beneath the RSI had you at hello for that insertion. Getting some battles occurring here on those vector candles. And if we go to the hourly, so the hourly had the opposite occur here. We had the hidden bearish of the money flow coming above the RSI, and we were making a equal, wait, was that equal or was that here and there? It's saying it's a hidden bearish divergence that started to play out here. So this was what we were saying yesterday. We were saying watch for that reclaiming of the cloud, which is occurring right now actually. So it's not exact, but if you shift this over here and move this over there and move this cloud over here, we were pretty on point in 24 hours time. I didn't change this point, I didn't change that point, and we came up to that point, and now we're coming down. So you're seeing this reclaiming of the cloud, trade with the cloud, my friends. So we came back to the 618 of this impulse to the upside here, bounced off the deviation here, and are coming back to the cloud on the hourly time frame. Let's go ahead and reassess the analysis here. We still have that pool that we were looking at taking up here at that 44K mark. That's the entire pools of the 1 minute time frame here. 44K has this $315 million pool up at 44,054, and that is exactly where this thing is. So even if we come up to here, that is one target that is on the table to be taken. And you are now abating the cloud in a manner here. Granted, you're getting crossover events, consolidation of this hourly time frame, but the cloud is starting to shift here on the hourly. Let's go ahead and look at the cloud again on the 4 hour because we passed over it. 4 hour cloud, even if we got a bounce up to this range of this fair value gap region, this is going to be a bearish retest type idea unless you can close candles with conviction above it. You have the super trend in effect until 3.6% away. Unless you can put some candles above this level, you could be coming lower. Overall though, you got the cross up event of the 4 hour telling you that the 4 hour and the 6 and the 12, that subtle support, that money flow disparity, possibly insinuating this push into some of these shorts up here. That's just where I'm seeing it for the interim now. Let's go back to that hourly time frame. Yeah. Going to the 15. We're going a little bit more into the micro. 15 getting strangely broken through the cloud, but the buying back as we go lower. This volume entering while we went into it was this interest of these 50xers, all of these pools of longs that opened up as we were dropping, getting gobbled up. So they're using this liquidity of the long interest to go retrace into their stops to use that as fuel for the passive buyers to gobble up. So if it maintains this level and that 236 line here in the sand at that 42.1 level, then we could still be on our path to the upside. The 15-minute time frame is getting the cross-up event right now as we speak. The Cinderella slipper of the Williams and the Rising Sun event, possibly giving you a 15-minute scalp here to the upside. Do we make it up to that pool or not? Let's go ahead and take a break from this and go to the broader market, starting with Dixie. So Dixie got a little burst to the upside here with the bank holiday. So let's go ahead and see what Dixie's doing. Dixie got a burst up. See, and this is one thing where you know what a true volume indicator would have. So this has no money flow in it because the Dixie has no volume present in its data. So you cannot see a money flow on Dixie. So if you have a indicator, for example, the WADA ATAR, which everyone claims as volume histogram, is actually a MACD and Bollinger Band differential. And same with market ciphers money flow, not real money flow. It's a SMA. So yeah, looking at Dixie, it's getting a burst up here, recovering this wick, possibly coming into the draw of this gap. Do you see some sort of recovery up in this region and then come back down? You have a gap here that was created in this 4-hour gap up here. So if you come to this draw of this candle, then you're going to see a retrace of the risk on assets, Bitcoin, NQ, getting a bit of a dump into this gap here. If this does not hold, then you're coming lower into the draws below. There is a gap down here that we previously whipped into here and respected the 50% of that we could be coming and breaking down at here to come lower on. Okay, so it all depends on this first move be having follow through on the Dixie or not. So there's multiple places where it could be disrespected and come lower at the midway point here if it goes up to come back down again. We'll just leave it at that. For the interim, looks like it's possibly coming up to this high at the bare minimum and maximum up to this level here. Okay, so possible retrace. Watch out for longs potentially dropping lower on NQ and for Bitcoin. So we came up to the 1.8 trillion mark a few days back, January 11th, reaching into some point of control area over here, and basically wicking off of that and coming back to the cloud on the daily, getting a daily cross down on total. If we look at the 3-day, also having that cross down event. The last time we had those played out for at least a little bit of a retrace. So here we got another 3-day cross down, cross down, cross down, cross down. And then those cross down events did give you from here 20%. If you include the entirety of this, 22%, 16%, and so if you're coming up to this region, let's just say you get 11% even, you come back to that 1.48, that's still possibility of 11% retrace for this cross down event on the 3-day. Same thing applying to BTC. We are on the other side of the adaptive though. So one thing to note here on the 3-day is the adaptive moving average. Think of it as a VWAP. It is also on the website here. You can look at it, the adaptive moving average. The adaptive is some support and resistance levels, and we got above it and started closing candles above this level. The last time we did that was over here in 2021, and also over here in September of 2021. Starting to close candles above it means more upside legs, and when you start closing candles below it, it's more downside. So this is the first time in quite a while that we've seen candles start to close above this level. So in terms of looking for a possibility of reaccumulation to stab back up, that is something that cannot be ignored as well. So even if we're getting this ambiguous thing about possibly pausing and going lower, this is giving signs of strength, at least for the interim, holding this region on the 3-day. Okay, this is for total market cap of crypto. Also the daily, let me just make sure this is accurate. So the daily time frame, getting that cross down event, getting a rejection off the 706 of this deep retrace from up top here. We never made it to the 786 level. All right, let's go into just the total 3, which is to say the alts. Alts not so lucky on that adaptive. They're rejecting off of it and possibly breaking down with whatever Bitcoin's going to do. We're saying respecting that 236 of that 503 billion. If it cannot get above that, then you could be coming lower. Still holding that cloud though. We were saying if it accelerates beneath that, then you could come down to this region. alts not giving up the ghost just yet. You have basically ETH BTC, there's the ETH ETF approval thing, which is why ETH is getting this insertion and that rocket ship takeoff. So the ETH ETF, when is that supposed to be? So there's the next thing is there's a ETH ETF, which is why the ETH is getting kind of insertion here. Will it get approval? So that is the question, and that's why it's holding the range here for ETH. ETH holding more of its gains than a lot of the other alts. Looking at crypto bubbles, still seeing some rallies on some of the alts because the Bitcoin dominance dropped quite significantly, coming to this range zone. Okay. So getting a significant pullback on the dominance here, but we were looking at the USDT dominance potentially, if it goes down, to come back up again. So the one thing we're looking at is that this is holding this cloud. What is the cloud from? This is, I believe, what time frame was that? The 12-hour? Yeah. So the 12-hour cloud on USDT dominance, we are above again. And while we are range bound and consolidating here, we are making a push back up above the adaptive. Now, when we hold this, even if we come down to this region here with the cloud, let's just say we do a shallow retrace, or we come back to equilibrium. Let's just say it's bullish. All right, so let's say we come back to this level and kiss the cloud here on the 12-hour. We could be putting in a support structure to possibly come back up, and for that idea to come and knock people into USDT. So this is the possibility of starting to come back and rotate out into USDT, which means knocking people out of their longs. So if we come lower and deeper, this means Bitcoin goes up, as this is inverse. So this is exactly what Bitcoin looks like on the opposite side of the spectrum. So us looking for Bitcoin to go to 45 and then reject at 45 and come lower to that 39K region. So that is what it looks like here. So if you invert it, it's the same kind of thing. Granted, this is different and cleaner and more volatile to the downside and stuff because there's not alts factored in. So here on the USDT dominance, people are also trading alts, so it's more range bound as they trade the alts as well. But ultimately you're starting to get back above here as people, the fear and greed starts to drop. So the greed is now at 64. It went up a little bit since yesterday, but people starting to consider taking profits on their longs as we reach into that bearish state. So getting one more push into the bullish area, and for a rejection would be that confirmation zone down here for me. All right. And that is about it. Let's go see if you guys have anything to ask for in regards to technical analysis. Let's go ahead and take a look. Slow retro synthwave. Yeah, that's right. What's up, Shaman? So as it stands right now, you're getting some indecision on the hourly because you're getting these cross down, cross up, cross down of the baselines. Overall, the overarching cloud is being reclaimed here, but the overall consolidation consolidatory nature of this and an inability to break out needs to see some conviction. This is the Asian session here, so does the Asian session bring the thunder? I doubt it. It would most likely chop around until London, and London brings the fury. But we will see with this Dixie play to the upside here. This is going to put a pause on any of that bullishness for risk on assets like Bitcoin and NQ. Okay. Got the cross down on the 6 hour here on NQ, so this is possibly cascading lower as we start to draw into these fair value gaps to test them for support. All right. Cross up of BTC here. Oftentimes I've found that NQ and BTC run inverse of one another. It's almost like they take their gains from NQ and then store them in Bitcoin, and then take the big gains out of Bitcoin and move it back to NQ. We'll see how this relationship comes forward into the future, but oftentimes I'm looking at Bitcoin on one screen and watching it go down as NQ goes up. All right, so well, if I had to put a gun to my head over this consolidation range, I would say that you could possibly get a little bit more stab of liquidity. Let's go see what the liquidity looks like. You have a $73 million pool down at 42,325. Clear those 50xers off the table and then possibly come up to the 196 million at 43,597 and their partner in crime at 44,054. We already marked that off up here. This deviation path of this 618 bounce hit the 27, possibly coming back down, refueling off an order block here or something and coming up to here. And that's my story, and I'm sticking to it. Potential upside for BTC, but be wary. Overall draw in an overall thing I'm looking for is a position in a short. I don't like to. We've hit this 236 multiple times now, so this is weakening, and the draw to that 39k is a mighty one on the monthly time frames. If you see all of this liquidity below starting to insinuate that we come down and tap it, so don't be the liquidity for the whales to reposition into a long and wonder if you wait. I'm just waiting to see if it comes up to the level here to scare out the shorts one last time. The shorts were not that thick as they entered here. There's not as many thick pools as they used to have. There is a thickness up in that fair value gap region, which is why we have it marked off over here at that 45k region. So they could, if they come up to that and fade, then that would be where we think about it again a second time. And then if we take the impulse from here to there, from this all the way to the bottom here, and then make this a pocket region or even a equilibrium, it's right around that halfway point of this 45,231. So do we hold this range? Are we going to go higher and stop out some of these shorts? I'm putting my bet on going up to stop out some of these shorts, but we will see. This is the Asian session. Asia is not known for pumping it, and it is essentially a Monday. It is Tuesday, January 16th, but the banks were closed in New York yesterday, so we could see some Monday false move action. It goes up to go down, or it just hangs out and just straight out dumps here. We gave our levels, we gave our intention, and that is about all we can do. So Once again, that's my story and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision,